GM. GM. So today's lesson, a timely one. Bitcoin hit all-time high today, sold off down to the lows. That's not the most important part. The thing I want to talk about today is reacting to big moves. So there's a tendency whenever Bitcoin drops, or any coin, but usually the market's led by Bitcoin. So there's a tendency to want to know where the bottom is rather than waiting for a retest. And the reason why we get retests is because people can't wait for them. So if you want to pull the chart up while you're listening to this and go to TradingView and go and look at BTC, and what you'll see is it flushes all the way down, right? It goes all the way down and then it bounces and then it goes down again, bounces at 64 originally, right? If you put on a 15-minute chart, it bounces around 64, pops up a little bit to 65 and a half. Then we get the big leverage flush, right? We get the big liquidation candle all the way down as low as 59.2 on Bybit, right? Now, as I record this, we're bouncing. We're at 63, nearly 64. And we'll go higher. We'll probably go a little bit higher here. But what it's going to do is make people now think, is the bottom in? And they're going to start calling it. They're going to say, that was it. That was the flush. The bottom's in. And it's okay to say that. Like, I think, personally, I think the bottom's in or very close. But I know from experience, that does not mean that it will only go up. It will go up, and it might go up a little bit more. It might go to 65, and then it'll come back down, and it'll retest 61 or 60 or 62, and then it'll try to go back up, and it'll maybe go even one more time again, and if it holds 61 or 62 then, and then it gets back above 65, then the bottom's in. Confirmation. Confirmation is everything. You can look at literally every single time we get a big move, every single shakeout, every single big liquidation event. You have the crazy volatile candle where it happens. You then have a bounce. You then have price come back down again and then try to form a higher low. Sometimes it comes down and just sweeps that low, but generally it comes back and forms a higher low. Retests. I cannot stress this enough. It's the most important thing you can look for. Do you want to know how important it is? If you remember, just last week on Wednesday, we saw, while I was on stream, the big crazy liquidation candle on Bitcoin, right? It pumped up as high as 64. It flushed all the way down to 58,600. Yeah? Go to your 1 hour chart if you're still looking at it and go look at that wick. Right? On the 28th of February at 5 p.m. UTC, we saw a big flush, a big shakeout, a big liquidation candle. Right? A crazy move, 10% down and all the way back. 7% down, I think it was. Look at where today's low is. Today's low is a retest of that previous level. These big leverage liquidations, these big volatile candles, the big crazy days that seem so wild, they have a tendency to get revisited. So just like the one from last Wednesday got revisited today, that's a retest. That's telling me that 59 to 60, right? We're at high prices. It's not supposed to be accurate to the dollar, but we can clearly see that between 58,800 and 60,000 or 60,100, that little zone there where the wick from the 28th of February has been hit and tested again and held. And guess what? Today's low will be no different because we have a crazy wick down into this level. Price comes up where we are now. Sometime, maybe it's tomorrow, maybe it's next week, who knows when it's going to be. Just like the last one was on, 28th of February, so it was a week ago. Maybe it's another week. We will come back into that area That's where you need to watch. If we hold it then, that's the market screaming at you, this is support, it's holding, buy support. Trying to say here, when it's at 64 and it's already bounced off the low, you might be right that it's the bottom, but trading wise, you're going to have to suffer because it will eventually try and go back down because the market itself doesn't know. The market needs to test for itself to see. The market has to go back down so the market can say, is this really demand? Is this really supply if it's on the upside? Same thing goes for resistance. That's why when you get strong moves, just like the all-time high, anyone who shorted the all-time high is about to get wrecked. Maybe not today, maybe not in the next week, but those people who think that just because we sold from all-time high, oh, short it, I can short 65, 66, 64, put my stop loss at all-time high, good luck with that. The market's going to come back for a test. It wants to test, just like it did this evening, is the demand real and is the supply real? Are the sellers really that strong? Let's go back and test. Retests, retest, retest. And this is really important for you to internalize as a trader because it will stop you from making emotional trades. It's really easy if you're too zoomed in to try and pick the bottom or predict it or like, oh, I'm going to get in now. I need to get in now. Or like this, the FOMO, right? The FOMO you might be feeling now. You're like, oh, I didn't get in at 59.5. I didn't get in at 60. So now I have to get in at 60,300 or 63 or 64. You don't. You don't. There is no FOMO. All these wicks, they almost always, apart from a few minor exceptions, these wicks almost always get retested in the following days or even the following weeks. So, no need to FOMO, no rush, take your time. It's all good.